Hi everyone, I'm the BTS Trader. I backtest market data to help you make better trading decisions. Today we're going to backtest over 10 years of S&P 500 data to see if there's such a thing called power hour. Certain hours in the day where there's a long bias rather than a short bias. But before we begin, please hit the like and subscribe button. So once again, I'm using multi-charts, but if you didn't hear my last video, I'm actually just using a trial version, so I'm not really endorsing it. So let's check out how I'm formatted the instrument. So we're using SPY, 30-minute bars. Session template is US stocks on regular trading, so no pre or aftermarket. Roughly 10 years of backtesting data using exchange time rather than local time. Okay, so we'll check out how I'm formatting the strategy to see if there's an hourly bias. And as you can see, I created a script or a strategy called hourly bias test. I won't go into how it's tested, but essentially we're basically buying at the beginning of the session hour and selling after the first hour, buying, selling, buying, selling. So this is how I set up the back test. So we're actually using what they call the use bar magnifier. So I spent the time to download the intraday 1 minute bars, and then we're using 100 shares. Okay, so here's the results of the back test. My impressions just straight away. So I know this could seem like, I know this looks great. Oh, $17,000, I know. But if I look at this percent profitable, hold on, let me sort back. 50% to 54%. I mean, I said this in the last result that 54%, I mean, that it's better than gambling. But in reality, it kind of shows you there is a certain level of market efficiency, because, these all really closely hover around that 50% where it's almost, it's essentially a gamble, a coin flip whether or not, without any other indicators or whatnot, just buying and selling the first hour, or let's say even the last hour, you're not really seeing that big of an edge, or at least not big of an edge where it's worth the risk. This is this result for 17,000 is over around 10 years of using 100 shares, which right now is it's quite a big investment. And what's crazy is that I actually took a price action course last year, which I have mixed feelings about, because I feel like the teacher does give some pretty good information, but he's also teaching day trading. And if there's one thing I've learned over the years is that, day trading is, there's some very good statistics and real statistics saying that basically that 97% of day traders do not make money. And even the 3% that do make money, they're not necessarily making a lot of money. So there's doesn't seem to be like a real statistical edge in day trading, or even a real benefit. And actually, I ran another test, and I'll show you that later on another reason why you probably shouldn't day trade. But so let's see. And also what's interesting is that this quote unquote guru day trader course that I bought, he enjoys trading the open. And I know a lot of people do, because it's really one of the most active times. But check that out. It's literally a 50-50 gamble I guess, you could go long or short, right? So it really looks like such a 50-50 gamble. It's pretty amazing how efficient that open is, really. And that's usually, I believe it is true. It is really one of the more active times in the market. But yeah, let's check out this graph. I'm going to get rid of all these gross loss, gross profit. So it is interesting. That last hour, if you are going to choose like an hour to call power hour, I guess you could say it is that last hour. And if you are going to say, or the last bar. I'm not sure if like I said, these are per bars, but yeah, that's the last hour basically. So yeah, but I mean, if we're gonna say there is a power hour, let's just call it is the last hour. And if we are gonna say there's a time where it does dump, the SPY just takes that lunch break, and it would be, yeah, it'd be probably close to that lunch time or afternoon time. But let's use this. Let's look at how this performs in the strategy. Let's see 13. So let's put that into the strategy 13. Okay, so let's look at the strategy performance report for trading that last hour. So yeah, like it already showed 17,000, 54% are winners. Max drawdown over here. Performance ratio, I would, yeah, definitely negative. I mean, there should be no, it's a day trade, so it should be pretty risky. Equity curve, I mean, I guess the equity curve looks okay, but total trade analysis, average trade win loss is only $6. I mean, so generally this as a system as itself, if you're an algorithmic systematic trader, you would never trade this. I mean, you would never. That average trade is just too small, because I'm also running this without any commissions or any slippage. Though, I mean, there shouldn't be too much slippage in the SPY, I would imagine. But okay, and let's look at the annual period analysis. So, I mean, yeah, there is some consistency here. It's been performing better, but yeah, you see there's some years lost here. But also, okay, let's see trading the open. Okay, so here's when the strategy performance report for trading the opening bar. And here's the annual period analysis. You can see that it's been a little more profitable. I mean, really slightly more profitable these last few years. But you can see that the beginning years, it was not profitable at all. And it's basically mixed results. So, I know people like to trade the open. And I mean, if you're a day trader and you have the ability to see like the right signal, or you do, you've tested a breakout strategy and it works, I mean, good for you. But just from this data alone, it shows that it is, look at this, almost close to 50-50 of, if you're trading the open, that you're winning or losing, I guess, depending if you're going long or short, right? Obviously. And of course, the performance ratio, this annual Sharpe ratio, is terrible. I mean, absolutely terrible. I mean, it really just goes to show you that day trading is, you're not really gaining that much, and you're risking a lot. So yeah, of course, like what we saw right before, for 10 years of 100 shares that cost a lot of money, especially now it costs a lot of money, you're only making this much before commissions, and it's a 50-50 gamble, pretty much. So I also ran another test on Apple, just to kind of, Apple is the biggest component of the SPY currently. It's only about a 5.8%. So, I mean, it's big. I mean, it's the biggest, but it's not like it's half of the S&P, obviously, since SPY is 500. But so here's the test on Apple. It's trying to see if there's also some kind of bias. And once again, I mean, you can really see these numbers are so close to 50% on this percent profitability of buying. And I mean, there's a lot of negative numbers. So in a weird way, I mean, if you were going to do a system, it would almost be like, okay, I'm going to sell go short the second hour and cover right before the last hour. But even then, like I said, I mean, that's something you would have to back test more. Don't take my word for it. But the edge looks so small in reality that that's not a system I would probably trade. But okay, so let's look at this the 2D graph again for Apple. And yeah, I mean, so you could kind of see it. It does follow along to the SPY. So you do see that there is a quote unquote power hour on the last hour, and then there is like this dump around the ninth bar of that ninth hour. So I mean, in a way, you could try to use that to your advantage, but from these percentage wise, like let's see, number nine, I mean, it's such a slight advantage, and you would literally, there's something called a number of occurrences because, I guess, this is over 10 years, right? So, for example, if you trade this strat, like let's say on the next session you go short on this ninth hour and you happen to win, but then the next day you lose, the next day. But the thing is that this 45%, like if you're going short, this is over how many occurrences? Over 1,000 occurrences. To get to this number, you probably need to get a, maybe not 1,000, but you need to be pretty. You have to be pretty consistent going short at 9 o'clock, or you need to be pretty consistent going long in the last hour, and that's only for like this 53%, like 3%, maybe 4% edge. So it's not something I would, so even knowing that, yeah, even though Apple and SPY do reflect that there's this 9 o'clock dip and there's this last hour push, it's not something I would trade as a day trader. Okay, so I added in this back test where we bought the last hour of the day, but the difference is from the first two tests is that we don't necessarily exit right after the first bar. So I just changed the exit rules to see, to optimize how many bars since entry would be more optimal than just, buying and selling right after we enter. So -1 is basically the back to back, buy, sell, and then 0 is like we wait 1 bar to exit and so on and so forth. And so I did this. So just a reminder, this is when we enter at the last hour of the day. And then I ran this test all the way to 200 bars. 200 bars. I probably could have, I could have ran it even further, but it takes time to run these back tests, and I didn't want to do like, a 2 hour. There's some people who do these back tests and run it for days, but I didn't, I wasn't interested in doing that. So yeah, you could kind of see right here. So the lowest net profit is really doing this like little day trade right here. And of course, our percent of profitability is still really only 50%. I mean, I know it says 53, but let's just call it 50%. But you can see that our net profit increases. I mean, there's some dips, but here's one thing: is you can see the percent of profitability just continually, pretty steadily increase. I mean, there's some dips, but on average, it keeps on increasing. So now we see some 60s here. Net profit is hitting the 30s now instead of like, I think the highest on that hourly bias test was like 17,000 or something over 10 years. So already improving close to, nearly double. I mean, not quite, but close enough. But yeah, we could see some 60% profitability, and then finally hitting 70% over here. And I'm sure if we kept, if I did this test even longer, there would be even, we probably hit 80, 90, to be honest, just because, SPY has an upward bias. So the longer you hold SPY, the what I showed from the last video I did is that you're going to be fine. So let's check out the 2D graph. Let's kind of get rid of gross profit, gross loss, and just look at the percent profitability. So yeah, you can see this, the red is the percent profitable. You can just see it on average going bottom left to top right. And the net profit, it does kind of actually level off. I mean, it does spike and then kind of see there's an average from here to here after a while. But it really goes to show you, like, basically bottom left here is day trading. This is not day trading. So I mean, good for you if you can day trade, but you are, you're like an Olympic athlete of traders, or and the ones who actually really make money, because there was a test. There was a study done on Brazilian day traders, and they found that even if day traders were profitable, they weren't actually making more than minimum wage. So that's why it's like even if you're profitable as a day trader, yeah, you're like an Olympic athlete, but I'm not sure if you remember, but back in the day, they used to show, maybe they still show it. I don't really watch normal TV anymore, but they used to show advertisement about how Olympic athletes, they were being, they were getting jobs at Home Depot, which is usually generally a minimum wage job or pretty close to minimum wage job. So, it really is the same concept. If you're a day trader and you can make money, but a lot of those day traders are not consistently making a lot of money, because seriously, if you just held overnight, you can see, well, maybe more than overnight, but if you're holding for a swing for like 3, 5 or whatever, your percent of profitability is just keeps on going up in reality. So actually, let's look at inputting this into our back test. Like, let's use one of these bar since entry rules. Entering on the last bar and exiting after X amount of bars. Let's see how the strategy performance report looks. So, let's just, we all like to see big numbers. So we'll just go for the one with the highest net profit. 61% profitable, 45 bars since entry exit. There's actually a little level of stability here, so we'll actually use 44. So let me go run that test now. We'll get back to it. Okay, so we ran the back test, or I ran the back test, but I want to show you, actually let's turn on commissions. 100 shares, we're actually using what they call the bar magnifier, so they're actually going to look at minute by minute data to give us a more accurate assessment. So let's look at the strategy performance report. So just a reminder, we're entering on the last hour of the day, and we're holding for 44-ish bars or sessions. I don't exactly know the rules, but it's actually not that important, because right now what I'm just trying to show you is that you have an increased chance of profitability if you don't day trade. And even though we see there is long bias on the last hour, and there is a short bias on the ninth hour of the SPY, not you can use it. We're all adults. You have the ability to make your own decision, but I probably it's interesting to know the information, but I think it's more interesting to know this information where, okay, so the highest net profit we could make on that strategy of buying and selling the last hour to SPY was like 17,000, but the risk was super high. While here, if we held for 44 bars, we get to 35,000. We increased our chance of by 5 more percent. Let's see the performance ratio. We at least now have positive Sharpe ratios, where the other ones were I think it was like a negative 1.5 or something. Like, it was a big negative number. Equity curves, they do look, they all kind of look the same because we're following SPY. Let's see, total trade analysis. Now our average trade is like $51. The last one was, I think, like $4, which is not very tradable in general. For algorithmic traders, for anyone, you can't really trade that. Let's see the periodic analysis. How does actually? So you can see that we're just doing this, you're mostly profitable. So you have some drawdowns here, but it's not terrible. You have some negative years, but it's nothing that extreme. This is basically break even. But yeah, these last years has been performing decently well. But of course, it could all change, like we saw from the other example of trading the first hour of the open. Even though the last few years, it looks like trading the first hour of the SPY or buying the first hour of the SPY is profitable. In reality, it's pretty mixed bag. It's really just a 50-50 shot. So there you go. We did see that the S&P 500 does have a long and short bias during certain hours of the day, But as retail traders, it's really hard to exploit that edge. You literally have to be in the market every single day during those certain hours, buying and selling. Not only that, but we see that market conditions change all the time. For example, even though it's profitable now to buy the open, 10 years ago, you would have been losing money. We saw once again that day trading is extremely difficult. There is no statistical edge versus holding longer. Okay, that's it for this video. Please like, subscribe, and I'll see you next time.